Hi there, Kevin Marciniak, Remax Realty 100. Hope everybody's doing well today. Let's get into it. I want to talk to you today about the state of the real estate market and more specifically prices and home appreciation. Couple graphs I want to start off with, and let's talk about first, number one, real estate and being one of the best still, even through the real estate market bust. Best return on investment, better than the Dow, better than the S&P, and better than the NASDAQ. Real estate from January of 2000 to January of 2013 still continues to be one of the top investments. Next graph I have for you talks about the 4 top advisors for the real estate market, and they have projected that home values will go up. JP Morgan Chase, Barclays, Capital Economics, and Freddie Mac all have projected price increases in 2013. Now, annual average appreciation versus the pre-bubble, during the bubble, the bust, and where they expect prices to go, about 3.3% yearly annual return. All right, 3.3% appreciation yearly to 2017. And when you look at the bulls versus the bears, the bulls being the positive outlook on the real estate market, 33.6% of appreciation by 2017. Median being the average, middle, 23.1%. And the most pessimistic real estate analysis, the survey said 11.2% of appreciation, gains of 11.2%. Now, projected home change in prices, looking from the Home Price Expectation Survey from the National Association of Business Economics and the Wall Street Journal Economics Survey, all roughly 3% projected appreciation by the end of the year. And then we have urgency felt by buyers. First quarter last year, 34%, second quarter, 57%, third quarter, 61%, and the fourth quarter of last year, 71% of buyers feel that there's more urgency in this real estate market. I am seeing it. I'm looking to purchase a home myself, another home, I should say a single-family home as I currently live in a duplex. But I am seeing right now with my clients multiple counteroffers, full-price offers, even myself not getting accepted, being beaten out. This market is changing, and it's changing fast. The buyer market is, not really a buyer market anymore. Now, I really want to break down prices, appreciation, buying now versus waiting till the end of the year. And this is going to be helpful for the current home buyer, first-time home buyer, or a buyer who has already owns a home right now and is looking to move up. So when I break it down, and let's just use simple math. So a $200,000 home at the current rate of 3.5%, principal and interest is just under $900, $898 to be exact, and some change. And that's over a 30-year loan. If you're going to look at the fact that all signs point to appreciation about 3% and almost a full point percentage increase in your rate, now we look at those same numbers, buying in the fourth quarter, third quarter, $206,000 home, at about 4.4% over a 30-year loan, your principal and interest will now be at $1,031. The difference between the first number I told you and the second number I told you is about $133 a month. That's a good amount of change right there. Now, when you break that down over the entire life of your loan, 360 months, 30 years, you're looking at about a savings or a difference, however way you want to look at it, about $48,000. $48,000 is a lot of money And that's money you can go buy a new car with, take a couple vacations. That's a good amount of money. And that shows just waiting a couple months, it's a big, big difference right now. And that's where, right now, if you currently own a house and you want to move up, maybe you've outgrown your current house, maybe you bought when you had the $8,000 tax credit, and you're saying, Kevin, we've outgrown our current house, we want to move up into something larger. This is the perfect storm to do that. With less inventory on the market, with not a spring market as far as more inventory dumping on that we're expected to see traditionally, again, we're in uncharted waters. You have to understand that you have the best time period to get your home sold. To be a move-up buyer, put your house on the market and purchase something a little bit larger, you're going to save a lot of money by taking advantage of this current situation we're in now. So, again, I don't want you to sit around and sit on the fence and think there's more inventory coming on the market. There's just not. It's everything I've been reading, everything I'm looking at. Yeah, we might get a little bit more of a trickle, but it's going to be a trickle. So I really want you to consider making that next step today. Give me a call. Let's talk a little bit more in depth about this. My number, 414-604-1384, or shoot me an email, kevin@homesbydale.com. Once again, I really appreciate you watching this. I'm going to get into a little bit more about a move-up home buyer next week. And again, if you are at all even considering of this, make the steps now. Don't delay. Buy today. Give me a call. Hope everybody has a great St. Patty's Day. We'll see you next week. And again, thank you for watching. Have a great day.